We got more earnings for you. Dell reports after the market today. Spencer Jakab, our head of the tape columnist, has a preview of it. Spencer, how you doing?
Good morning, gentlemen.
Looking very sharp, I might mention too, you know.
Thank you. This is Joseph
Right.
A.
Just showing me something about the jacket, that's all.
This is the point I want to make. You mentioned that Dell's, in your head of the tape piece today, that Dell's market share really peaked around 2005.
That's right, yeah.
I want to ask this question. The dude you're getting at Dell ads, you remember those ads, right? Everyone remembers.
Right.
Hugely popular. That company has not been the same since that guy got pinched downtown for trying to buy pot or sell pot or whatever. let's be for real. How much has that affected Dell's product?
Look, I mean, you think back not even 6 or 7 years, but think back 8, 9, 10 years. Dell was really a pioneer, selling direct, selling by phone, selling the internet catalog. It was a company that got really good at making things just in time, assembling these boxes cheaply, and selling you exactly the customized product you wanted and dealing with the consumer. And that's not what they are anymore, and that's not what they want to be. And if you look at the makeup of their margins, they would rather sell less to you and I and sell much more to our employers, or the governments.
Corporate business,
state and
storage
local,
capacity, services, and so forth, right?
Right.
Yeah.
What they sell is different. I mean, they started a software division recently. They make much more money selling servers, networking, doing consulting.
IBM's done the same thing, right? I mean, it's the obvious things. I mean, you're in a commoditized business. You want to get out of that because you're immediately facing those margin competitions. But can they do it? I mean, that's also a crowded space, is it not?
It's a crowded space. They're in the process of doing it. I mean, their margins are not spectacular in those areas, but just look at a comparison. Look at small companies, large companies, and governments. Give or take, their operating margins are right around 10% for those guys. For selling to you and I think they've gotten up from barely negative a couple of years ago to about 2.5%. I mean, they don't really make a lot of money selling you or I a commoditized laptop and competing on price. What they make money on is selling to large companies and then selling them other services, selling them selling them software, selling them storage, selling them more expensive storage solutions.
Yeah, but again, like you point out, that is a crowded space. I want to talk for a second about software. What kind of software? I didn't even know they were doing software, to tell you the truth. That's a competitive market. How do they get into software? What do they sell? What are they trying to do there?
What they're basically selling is enterprise software. They're coming up with their own enterprise software, things that optimize servers and storage, things that allow companies to use their hardware more efficiently. And rather than buying it from someone else, they want to sell companies the complete package.
Right.
So what should we look for on the earnings tonight?
Well, on GAAP basis, Street is looking for 47 cents. I think on an adjusted basis, the number that's more often cited, it's 50 or 51 cents. I think they should meet or beat those numbers because there's a lot of scuttlebutt about fourth quarter having been a little bit stronger, even in the consumer space. The thing, though, about this quarter is that they are being affected, they and everyone else are being affected by these floods in Thailand, where a lot of vital components were being made. And so it could have actually had a salutary effect in the sense that it trimmed their top line. They pruned, even more than they already were doing, pruned sales to customers that they didn't really covet by raising prices, and then charged more to their their more valued customers, or sold more to their more valued customers. I mean, hard disk drives in particular were affected, which are a key product. And Dell, I think that you understand. You don't look at Dell in the same way you look at Apple. They're not a hot consumer stock. They're not coming out with brand new products.
You don't look at anybody the same way you look at Apple.
I mean, but many years ago, you would have mentioned them in the same breath, and today you don't. They're really different companies. But that's okay. I mean, I think if people really are underestimating Dell to some extent, and you can still make a lot of money doing what they do.
All right, got to leave it there. Thank you very much, Spencer.